Welcome back. You're still tuned into Markets at Noon, and let's now take a chart check. Nifty is below that 26,000 mark. Will it fall further? To understand that, we now have Rohit Srivastava, founder of Strike Money Analytics and India Charts, now joining us. Rohit, afternoon. First up, your chart check on Nifty and Bank Nifty. Now that we are below that psychological mark of 26,000, do you expect markets to fall further?
So markets are getting pretty oversold right now, and we are at the first critical support, which is at around 25,900 for the Nifty, and Bank Nifty close to around 59,100. So I think these are important levels. If there has to be a further slide, then we probably have to close below these levels by the end of the day. If that does happen, then yes, we would look at another 300-400 points cut in the Nifty. But if not, then I think we are possibly at the bottom because some of our proprietary indicators like the daily swing is already getting very, very oversold. I think, and that's happening more because of the broad market sell-off that has been consistent, and that is causing the readings to get extreme, even though we've only seen the Nifty fall for 3 to 4 days. So my sense is most probably we hold this level and start a rebound. We will be watching till the end of the day. If it does hold, then possibly we should bounce back and resume the upward trend, at least in the Nifty. The Bank Nifty might still continue to wait for the RBI policy into Friday before we see further action.
Okay, so that's the take on the Nifty and the Nifty Bank. Rohit, hi, good afternoon. 26,000 was that one psychological mark that was at least keeping investor and viewer concerns at bay. Now that we've broken down below this, where do you think the sentiment could be headed, if anything, the charts are showing to you right now? Because you did speak to us about the levels, but what about the moves that we're seeing in IndiaVIX also? It's not showing a lot of momentum in the market.
No, IndiaVIX is not showing momentum, but IndiaVIX is also not showing extreme fear. Otherwise, it would be at 19 or 20. The low readings essentially show what is being reality, which is the low volatility in the market. So you definitely want volatility to expand, but you want it to expand on the upside. And that is something which is failing us time and again, even though we have consistently made higher bottoms in the market over the last several months. So there are two angles to it. When you say we are making higher bottoms and higher tops, then that's essentially the signal of a upward trend in classic theory terms. But what you're not getting is speed, and speed is why you're being concerned that, okay, if speed is lacking and if you don't get participation across the board, because we have sort of a fractured, market where large caps actually, recently large caps are doing better, the mid caps are selling off. And if you went 2 months back, you found that, the Nifty was stagnating, but the mid and small caps were on fire. So this kind of rotation keeps us, on check all the time as to whether the market has sufficient strength. But my sense is overall looking at how individual stocks are behaving. The weak ones are basically bottoming out or getting exhausted on the selling side. The strong ones are only pulling back each time to find support at a higher level. So this is just a slow and steady process of the market finding its base so that it can head to much higher levels in the year ahead. So this is just a base formation process that we have to go through. But that does not mean that it is weak. The 26,000, like you said, is only psychological. Technically, you need to break past around 26,300 for something big to start on the upside. Similarly, on the downside, I think the immediate level that we are looking at is closer to 28,900, 28,880, and we'll be watching that for the rest of the day.
Okay, so some important levels to watch out for on the Nifty, and 26,000, as you're saying, is technically not an important mark. Thank you, Rohit, for taking your time out and joining us this afternoon. That's the